This is one of the most important secret lessons and secret weapons when it comes to trading crypto, investing in crypto. Volume is one of the only forward-looking indicators that we can use to help us understand where price is going to go and whether you're on the right side of that move or not. So if you look at other indicators like momentum, which is a huge part of my strategy, and moving averages, etc., they're all lagging indicators, but they're still very powerful. But volume mixed in with those indicators and price action is very important. So what is volume? Volume just tells us how much participation there is behind a move. So it tells us whether, if the price is moving up, buyers or sellers are really willing. And it tells you how much trading actually is taking place behind the price. So in simple terms, it tells you the strength of a move. So if you have, for example, a breakout like this, okay, and this is similar to the Bitcoin top, where price is pushing up, for you to have an idea of whether this is a good move to be maybe buying to catch that trend, or whether is price going to actually, is it strong enough to keep going, or is it going to turn around on you? The only way we can tell is using volume. So for example, when you have a move like this, where price is pushing up, this is the price. When you look at volume, you would want to see volume move up with this move like this. This is mega, because when volume, for example, like a lot of the volume indicators, right, they kind of move oscillating. They kind of move like other indicators like RSI and stochastic. So you can get in zones of where you should be buying and zones of where you should be consider selling on volume. But when we have an explosive move up, volume is going to be the secret weapon to tell you, hang on a second here, is this move real? Is this price breakout real? Is this price moving to the upside? Is it supported? Should I be buying now? Is this a safe trade to take? So what we want to see is volume pushing up like this. Now, if you were to see price push up and volume do this, then that is a very dangerous move. Because the way I look at it is like this. Imagine you have a table. Your legs support the table, right? So let's say we've got 4 legs. And volume is a reflection of the strength of a move, or volume in this case is the legs. So as price is pushing up, like your wooden table or whatever, you're kind of adding more legs to the table. You're making it more sturdy. Now, as soon as, let's say, price starts to go sideways, or maybe price is even going up, but volume is going down, the easiest analogy to understand this is that think of it like kicking out a leg from the table. Every time price makes a higher, pushes higher, but volume's dropping, you're slowly taking away one of these legs. And then eventually, when volume's super low, what happens? All of the legs from the table have been kicked out, and there's nothing to hold the table up. So what happens? The table crashes and breaks and falls to the floor. And volume is exactly the same. So when you see price go sideways like this, and volume is maybe has pushed up and then starts to go and pull back, volume is dropping, then what this tells you is that there's less conviction, or money is coming out of the markets. And so if volume is dropping or players are leaving the table, what's left to hold the price up, right? Like a lot of the trading, my trading strategy and how I look at investing and trading is just it's common sense, honestly. It's yes, it's technical in terms of understanding the concepts and how to set up your charts, how to read the indicators. But after that, it's the psychological part. It's just a lot of it's common sense, right? So price is going sideways. Why is it going sideways? Again, volume can tell you that. If volume is pushing up and then all of a sudden there's not enough buyers, there's not enough volume, there's not enough people in the markets to push the price higher, volume is going to tell you that. It's going to say, there's not as many buyers now. Actually, buyers are leaving the table. What happens? Price goes sideways. And then when volume drops, price follows. So volume is one of those secret weapons that you really need to have. Now, likewise, all right, so, and I'll show you some real life examples in a second, but this is actually a replica of the Bitcoin top. Because what happened on volume, which I will show you in 1 minute, is that volume was pushing up. And then the reason I was calling the top and the reason myself and my private members were selling was because I was telling them that data like open interest, like volume was dropping. And that's telling you that the big players are like, no, I'm out of here. I'm leaving. I've taken my money and I'm going. We can track volume in two ways, by the way, as well. So we can track it on perpetuals, or basically leverage. And we want to track the spot volume from all of the exchanges, including the DEXs and the decentralized exchanges such as Hyperliquid and Aster. But we track across two principles. We track across what's the leveraged volume doing and what is the regular spot, or the people buying the underlying asset. What are they doing? So that is the main two data points that I focus on. And it's a very specific concoction / recipe of volume, because there's a lot of different ways to look at volume. There's a lot of different types of volume, but the volume I look at is a very specific volume that I'm working on building into a product that you guys, private members, will actually be able to use, and I'll be able to continue talking about a little bit of it on here with you as well. So in a down move then, of course, you're expecting volume to be dropping, right? But what we can use volume for, not just to show the strength of a bullish move or a top, is to help us with bottoms. Exactly the same. So, for example, let's say, for argument's sake, let's say this is close to where the bottom is right now. What do you want to see, do you think, on volume? Do you want to see volume continue to drop? No, of course not. So, as I said, volume is the forward-looking indicator. So what you want to see is, as price, even if it's making lower lows, that's fine. You just want to see volume start to move up. You want to see strength starting to come in and build like the table, start putting the legs under the table. Now, just because volume comes in doesn't mean that all four legs are on the table, right? You have to take it one step at a time. You have to take momentum into account as well, supply and demand zones, and the cyclical seasonality of the markets, because the markets are very cyclical. They repeat over and over again. It's actually quite wild. So there's other factors to take into account into the beautiful stew here we're trying to create when we're taking an investment decision or a trade. But the first thing we want to see is volume start to increase. That's showing us that the table is starting to get support. We're starting to get a leg here. All right. And then, of course, you've got volume on different time frames. You've got daily and weekly. You've got the 4 hour. They're the main time frames I look at as a long-term swing investor trader. So you want to be looking at the different time frames. All right. 4 hour, daily and weekly. All right. So what you see tends to happen then is when we see volume push up, yes, price will either, what do we expect it to do? Of course, start to consolidate first, at least. And if you see a consolidating market, whether it's bullish or bearish like this, and volume going, let's say, up for a potential bearish breakout, or volume going down for a potential top, that's the key. That's the signal that's going to give you a heads up And this is where the pops come from. I call them the pops, right? I think everybody knows what a pop is. A pop is like when price action just boom, just out of all of a sudden, Bitcoin just explodes up in price, or maybe explodes down in price. And you might be sitting to yourself wondering, wait, like how did I not see that coming? Or how can I see that coming? Again, this is where volume and open interest as well play a huge role, because they give you that heads up ahead of time that, hey, expect, do not be surprised at any point of a push up here, because volume is supporting the move. So that's super important. The basics of how I use volume and what I look for. So for a bottom, for example, let's say we're coming into the end of this year, or even at this time frame, we want to start to see the charts, the candlesticks start to form a bottom, consolidation, right? Ideally an engulfing candle. But then what we really want to start to see forming ahead of this, which will give us a heads up, is we want to see on the daily and on the weekly time frame, we want to see volume start to pick back up. Now, there's different calculations for tracking volume. The way I do it, I have a fast and a slow. And one method gives me more of a faster, like your measurement calculation on the volume. And then the slow is a more zoomed out version. That's like calculations a bit slower. So the average is a little bit more smoothened out. And they're the two ways I like to look at volume. I've got a fast and slow way to look at the actual movement. Okay, so now with the basic run through here of how volume works, let's have a look at the chart. Okay, so I'm working on a tool that's going to help you use this, and it'll be publicly available too. It's in development at the moment. So bear in mind that will be coming out soon. All right, so we're working on it. But just to give you an example here, this is how I run through this with my private members, and I've shared these charts, I share these updates, we track this every week, where volume is at. So in simple terms, I'm going to fly through this so it's not like crazy long video. The blue lines is perpetual volume. Okay, perpetual volume, or in simple terms, leverage. All right, so the blue line is leverage, this section of the chart. And then this section of the chart is spot volume. All right, so the blue line represents leverage traders or perpetual volume of 100K orders and above, the big boys. And then the red line is probably you. It's retail, 10K orders and below. And again, the same down here. This is the spot whales, the guys and girls actually buying the underlying asset, 100K orders and above. And then the red line is the regular punters like myself and yourself, potentially getting those orders of around 10K and below at a time. All right, maybe a little bit higher. Well, actually, no, for this, it's 10K and below. All right, so that's what the measurements are here. So at a glance here, which one am I in? Am I in fast or slow? Let me just check. I am in, all right, I'm in the slow. Let's just do the slow for today. All right, so if we look here, what we can see is this. This is how I was able to effectively time the Bitcoin top. So this is how I was effectively able to sell and take profits at the Bitcoin top. Keeping this super simple on volume. Okay, keeping this super simple. If we just come over here and we look and pretend that, let's just say, let me move this out of the way. Let's just pretend that, for argument's sake, right, this part of the chart does not exist. Okay, so this part of the chart does not exist. All right, let's just pretend that. So we're just looking at the Bitcoin top. This is how I was able to confidently take profits at the Bitcoin top and my members. But before I do that, actually, what you'll notice here as well, just by briefly looking at this, is how retail and yourself get it so wrong because you don't have data. So for example, the whales started to sell both perpetual and spot volume they were selling from 112K. So from 112K, even including this top here, spot volume was dropping, perpetual volume was dropping. This was screaming the Bitcoin top. Now, if you look at this point here, where the whale starts to sell, look what happened with retail. Retail were going long, and they got smashed the whole way down here. You'll see this over and over and over again. Even at this point here, look, okay, where the bounce was happening at around 94K, whales are going long, retail were going short, getting destroyed. So this chart shows you that the inverse correlation between retail and the whales is why you are losing money. It's why you have lost money. It's why you consistently cannot be profitable. It's because you're getting destroyed by not being able to read the data. You're getting eaten alive by not being able to read and track the data. I could have saved you probably thousands and hundreds of thousands, depending on who you are and your portfolio size, by just looking at volume. All right. We can see this over and over again. But anyway, look what happens here. So we have the big boys and the big girls selling, closing their long leverage positions. Then we have the spot positions starting to be sold. What are retail doing? Retail are going, I'm going to go long here, long to the moon, 150K. I'm going to listen to Arthur Hayes and all these other dipshits on the internet that don't track this stuff properly and don't trade and get you wrecked. So what happens? Exactly what I said. The volume starts to drop. Sure, you're going to get little pushes up as liquidity and retail do come in. But what happens then? Price pushes up. Retail are thinking, yeah, we're going to go to the moon here. And at that point, the volume completely, at this point here, the volume is super low, super low, only going one way down. And then all of a sudden, the Bitcoin top happens and everything crashes. Because when there's no volume to support the price action, how is the price supposed to stay high? It's literally as simple as that. Okay? And again, more recent trades we've taken. So this was the long trade we took back in February, back up to March. Exactly the same thing I took. So I could see that the volume was super low and was starting to build back up here. Leverage positions were starting to build back up here. Okay? And so what happened? Retail went short here, got destroyed. Retail were going short here, got destroyed. Retail, again, did the opposite to what the whales are doing. But that gave me the confidence to go, right, volume is low, it's going to pick back up, and it's going to push the price up. Again, that was the first trade we got in Capital Circle. The second short that I'm still in right now, look what happened again. All right, we had other technical areas in the charts, like supply and demand zones and momentum. And again, remember, volume moves off momentum as well. So that's why momentum is so key. But again, look, I could just see volume was super high, okay? And I was expecting volume to drop. Players to take their money because we're at these ranges where historically volume tops out. All right, it was here and it was here. And then we had this colossal pullback. So for volume, for me to be super kind of confident about the Bitcoin bottom, like volume has a long way to fall, my friends. Back down to the local bottom zones. Look at the local bottom zones. One, this was the bottom zone here. Or if we go left a bit further, and this is a slower moving average. This is a slower mathematical calculation for the volume. But you can see it does actually tend to bottom here in the same ranges. Look. All right. So my point is volume is slowly making its way back down. And that's the retail traders being sold into. Now, this would be the faster view of volume. This is a faster tracker of volume. And this is it's the same time frame, but just the calculations are a little bit faster. So it captures the volume a bit faster. And again, this was another major reason, the faster. I use the faster for more the swing trades, and then I use these slower calculations for more like the Bitcoin bull run tops and bottoms. But as you can see here again, volume super low. That's why we were buying. Volume ran up, leverage volume ran up, Spot volume ran up, and look at the inverse correlation, folks. Look at retail, maybe yourself, getting wrecked. And I had a few people that are interested in joining Capital Circle that had bought at the wrong times, and I could see they were these people. Because look, volume's dropping from the whales, and retail are going, no, it's going to go long. What happens? Price pulls back, you get absolutely destroyed. But you can see here, this was another super strong confluence. I can see volume was super high. All right, super high at areas of where the Bitcoin bull run topped out. And so what can you expect? Again, you don't even have to be super technical. Volume to drop means people are leaving the market. Participants are selling. There's not enough conviction behind the move. And that's it. Price drops. So going long right here, yes, sure, we can get another pop up here in price. Volume could push back up. But for a long-term investment for me, buying at these levels for the volume does not make sense. How could it make sense? Look at when you want to be buying when volume's low, my friends. Volume's low. This is the real-time price action here. Okay, so for me, I would see volume come right back down here and reset, maybe later in the year, along with a few other pieces of information I'm tracking. That's where I'm going to take the entry. So that's it. Quick masterclass on just how to use volume and how I use volume. This is a product I'm working on to be available to the public soon in terms of how I track the volume myself personally. And with that, make sure you subscribe and like. If you want more content about this, let me know in the comments.